Neutron is a tightly integrated ecosystem that is purpose-built for decentralized finance. What I mean by this is basically we make the blockchain itself like really available to the small contract developers so that it's kind of like their app chain, right? But it's the app chain of many applications and many teams, if that makes sense.
GM. In this episode, we sit down with Avril, CEO of Neutron, a DeFi-focused chain part of the Cosmos ecosystem. We will talk about Neutron's evolution from an ICS chain to a sovereign proof-of-stake network, what that means for composability, and how they're building infrastructure purpose-built for DeFi. Welcome, Avril. Great to have you here.
Thanks for having me. It's a pleasure to be here.
I usually like to start from the beginning and to see exactly who is the human behind the chain. So, Avril, what were you doing before you entered crypto? What were those early steps like, and how did they eventually lead you to Neutron?
Yeah, well. So first, like, it's not a person behind the founder; it's a newt. Just quick fact. But no, before crypto, I was I picked up an interest in kind of like how the financial system was functioning, anonymity, privacy online, and a bunch of other kind of like topics that I think are relevant to freedom in modern society, basically. And like the Snowden revelations, the 2008 like crisis, and such were kind of like really eye-opening moments for me. And that's when I started like digging into these topics. And so when a friend of a friend kind of told me about Bitcoin for the first time, I was like, oh, that's really interesting. Like, money that doesn't depend on any government or bank or such, that people can just transact with one another freely and anonymously. That's what people believed at the time. That was really, really interesting to me, basically. So I started looking into it, into Ethereum once I discovered that. And it sort of like stayed as a thing that I was doing as like a curiosity thing on the side until 2020, basically, like DeFi summer. At the time, I had started my career as an investigative journalist. I was just basically freshly back from spending a year and some in Asia for 3 documentaries that I was working on. I was working on like corruption, climate change, and sort of like tourism in the region. And so I came back, started working on editing them. I was working basically like leading the business side of a newspaper, like a small newspaper company in my hometown. And so I was doing this during the day, and then at night I was like, oh, the crypto thing, it's now like what I was excited about potentially seeing in the future, it's happening now, right? Like like things like the first dexes and compound and all of these things, right? And so at night I would basically like that would become my second job, kind of like I would research how do these mechanisms work, how do the new blockchain designs and consensus algorithms that are being proposed kind of like function. And after some time, it led me to start interacting with the Lido folks. So Lido is the kind of like the liquid staking protocol, and they basically initially hired me as a community manager for the Lido on Terra implementation like protocol. So Lido is primarily on Ethereum, but it had this like other implementation on the Terra blockchain, which at some point we actually grew it into a larger protocol by TVL than Lido and Ethereum for a short window of time. And that was my first experience kind of like working in crypto, and that was like really eye-opening. One of the things that I love the most about it is like I guess 2 things, right? Like the first thing is I got really lucky in the sense that I got to work with some of the brightest people from my first experience like going forward, and so that taught me a lot. and also like just liquid staking as a business is really interesting because it's very close to the metal of the blockchain, right? Like to the validation process, like to how consensus works and all of these things, right? And so that was super interesting. And the circumstances were that the team I had joined was, before I joined, we were like 11, right? And 11 devs, basically. Like there were, they basically were no one to do kind of like the marketing, the business development, the strategy and such. And so like I just naturally started doing a lot of these functions, basically stepping up and like taking over these roles.
All the
And
non-technical roles.
yeah, basically like the devs do the dev things and I'll do pretty much everything else.
Exactly.
And so, you know, that was kind of like a fun thing to do. It was hard work, but it was really interesting because I was, you know, applying a bunch of new skills to a new industry. So I grew a lot I learned a lot and I grew a lot during that period. And, you know, fast forward a couple of months, Konstantin Lemashuk, who's the CEO and co-founder of P2P, who is this like validator company that was handling the Lido on Terra deployment. So like reached out to me and it was like, hey, I'd like there to be kind of like a general manager, like a kind of like CEO, but for that team, for that team specifically, and I'd like you to take a shot. And so, you know, to me that was kind of like surprising and humbling in the sense that like, oh shit, I didn't expect, you know, that to be like on the table, but like it was. And so like I accepted, and you know, shortly after like Terra itself collapsed. And so, you know, we had built like from zero to like $10 billion back to zero. But on the way we had learned like, you know, a lot about what the limitations of DeFi were, what kind of like challenge you face as a small contract builder, basically. And that informed
and that
kind of
is
like
more
what
than
eventually became.
that is more than a hype at the end of the day.
Oh yeah, like actual problems that we faced while trying to build a very, very large application and scaling it, basically, right? And so like these kind of like problems that we faced during that period kind of like became the problem statements, so like the initial ideas, right? The solutions that we brought to the table that eventually became like Neutron, right? So yeah, that's kind of like my story in a nutshell.
Now let's ground things a little. For those unfamiliar, what is Neutron in simple terms?
Yeah, that's a good question. There's this saying of like, if I had more time, I would have written you a shorter letter. Like putting things really concisely is kind of like always a challenge. I would say Neutron is a tightly integrated ecosystem that is purpose-built for decentralized finance. And what I mean by this is it's a network that is offering unique infrastructure that you can't find anywhere else on any other shared execution environments. Like the type of infrastructure you find on Neutron, you will not find on Solana, you will not find it on Ethereum, not on Arbitrum, not on Base, right? Basically, we make the blockchain itself like really available to the small contract developers so that it's kind of like their app chain, right? But it's the app chain of many applications and many teams, if that makes sense. So that's one, and it's also an ecosystem, right? So like we work really closely with all of the teams in our ecosystem in order for them to integrate with the network and the functionality, the benefits that it offers, but also with one another, so that we can maximize the capital efficiency of the ecosystem as a whole, right? So yeah, that's kind of like a very short. Yeah.
And what kind of problem does it solve in the broader ecosystem, in the Cosmos and DeFi ecosystem?
Yeah, that's a really good question. So I think there's kind of like two levels to this, right? Like fundamentally, the reason why we're building in DeFi is, you know, I mentioned earlier, like I've always been very interested in like the limitations of the traditional financial system and the extent to which it doesn't work well for everyday people in like throughout the world, basically, right? It's kind of like it's very closed. So like, you know, I don't know about you, but I never had the opportunity to invest in a hedge fund, right? Like that's just not something that I could do.
We are from Romania, bro, so no.
Yeah. Right. So, exactly, right? Like most people, like 99% of people, like don't even fucking know what a hedge fund is, right? But the reality is that that's where the money is, right? And so if you're, the reality is we're not playing on an equal playing field, right? If you're already rich, it's much easier for you to get richer. If you're not, then like good luck. And so what I like about DeFi, what's interesting about it is two things. Like first, it's an opportunity to build a financial system that's way more open and that's way more fair for everybody to participate in without being, kind of like selected against, basically. And two, it offers like net new benefits that like the traditional systems don't have. Like, hey, if these things in my wallet, like my key secures it, right? I don't trust anybody. I don't depend on a government or a centralized like a firm or something. Like these are my things, and I can send them across borders instantly for very, very cheap. So I can pay my family when I'm when I'm traveling or when we're like separated and such, right? Like I live in Thailand and like I have family here, but I'm French initially, right? And so, every month when I'm in France, like I need to make sure that like my family is taken care of, right? So I do remittances, right? That's like $70 per transfer on like Wise and stuff, right? With crypto, I do that in 5 seconds and like and less than a cent, So that's kind of like one layer of it, right? Like that's one problem. And so the reality, and now we get into like the more specific, right? Which is, so, there's this big problem with the traditional financial system, and then we proposed like DeFi as a solution, right? But to a large extent, DeFi has not replaced or solved that problem, right? Like most people today don't consider like DeFi protocols like their banks and stuff. And there's a couple of reasons for this, which is one, generally speaking, right, the performance of blockchains was just not there, right? But I think that's to a large extent that's getting solved today. Like performance today is no longer like, oh, wow, look at this chain. It's like so fast and so cheap and whatever. It's like, it's expected, right? It's table stakes. It's like, it's a requirement, right?
It's a bare minimum.
Exactly. Yes, exactly. And so, performance is important, but I think more importantly, just the design of our application, the limitations of smart contracts in terms of what you can actually develop are such that like the products that the industry has brought to market so far are just like worst versions of things you would find in TradFi, right? And as long as that's the case, we as an industry will not be successful at actually meaningfully changing people's lives, right? And so what we do is we lift these constraints in order to enable people to build applications that are actually competitive with or better than traditional centralized alternatives in order to like help push forward towards a world where DeFi wins and everybody benefits from it, if that makes sense. And we do so by creating really deep infrastructure. Like, if you are interested in it and you think it will add value to your audience, we can talk about like custom transaction ordering, like custom like block production. We can talk about like, native automation and like enshrined oracles and all of these things. But the key point, right? Like the thing that's interesting about them is if you have access to these things, which you don't have anywhere else, basically like no arbitrage, no Solana, nothing. If you have access to these things, you can build mechanisms that are just way more efficient, which means that like as a user, you don't waste money, you don't waste time, you're protected against like, sandwich attacks and that kind of like bullshit and stuff, so that you don't get exploited and you can just get to openly access a financial system that is fair for you to participate in. Like that is kind of like what we're trying to do, fair and efficient systems.
You talked earlier about the fact that the fast change, right? And the Mercury upgrade is just around the corner, is a huge moment. You basically are gonna unlock higher throughput, faster block times. Can you explain exactly what it means migrating from ICS to proof of stake network?
Yeah. So a few definitions. I'm sure your audience is fairly familiar with this already, but just in case for those at the back. So in like Neutron is a proof of stake blockchain, which means that there's a number of validators that run and verify the network, and the way that they are selected is unique because Neutron launched on a technology called replicated security, where instead of competing by staking the network's token, the validators were inherited from another blockchain's validator set, and that other blockchain is the Cosmos Hub, right? And so, Neutron launched on this technology. It was the first chain to launch on this technology.
The first one.
Yes. The idea at the time was that for the consumer chain, this would allow a high degree of security and reliability, and it would make putting the validator set together like easier and such. And for the provider chain, the idea was that it would create new use cases for the token. It would generate new revenue for the network and such. But while the technology itself works, there's as a product, it hasn't really found product market fit, and there has been a lot of slight inefficiencies basically that have appeared over time, and the incentives alignment of the different parties, reliability of the infrastructure and everything. And so what Neutron's next upgrade does, this Mercury upgrade, is basically it says, okay, we work together really closely for 2 years at this point, and some things have worked, some things haven't worked. Let's both networks now have a very strong vision that they're developing, and so it makes sense to empower both of these networks to pursue them as efficiently as possible. So let's basically set the score, create good conditions for the projects to continue collaborating in the future, and enable both to deliver on their visions as effectively as possible, right? And so for Neutron, what that means is instead of inheriting this validator set, the network will now be selecting its own validator set, right? So the way that this will work is a bit different from other proof of stake network. When you look at a lot of proof of stake networks, what do you think are the problems of proof of stake? What do you see in the ecosystem that you think is problematic that we should try and fix?
I think one of it, high APRs and people dumping the rewards. Sometimes a bigger validator set doesn't really make sense. I mean, yeah, okay, decentralization, but at the end of the day, decentralization is very utopic because most validators use maybe the same cloud providers in the same regions, so it's actually hard to have a set that is globally distributed and to actually respect decentralization.
Yeah, I think those are yeah, I think those are both good points, right? So one, the staking APRs are high, so there's a lot of new tokens getting into the market, and there's so many, in fact, that it's kind of like a flood, and so the price of all of the assets collapse, and everybody loses, right? So that's definitely one. And the second one is that you mentioned, right, is that you have these massive validator set, but actually, does they really contribute to decentralization? That's a good question. And what we see, to be a bit more specific, right? You take most proof of stake blockchain, you maybe have 200 validators, but most of the voting power is in 30, right? And so these 30 guys are actually running the chain, and then everybody else is fighting against one another to try and get ahead and stuff. And it's everybody lose again, right? And so we're trying to learn from kind of the history of proof of stake so far, delegated proof of stake, and try to make adjustments that allow Neutron's model to serve its objectives, right? The objective of Neutron are, we want the network to be as performant as possible, because as we said, it's just required for finance and also just for general user experience. We want it to be high performance, we want it to be very secure, and we want it to be reliable, to be as decentralized as possible, right? Now, you made an interesting comment, which is decentralization is utopic. I don't know if it's utopic. I just think that we're not going about it in a very... It's not even that we're not there yet. It's more so we're also not thinking about it very pragmatically, right? In when you're putting a set together, right, what matters is less the number of operators But it's more like, okay, are they distributed? Like you made really good points, right? Like, are they using different like data clouds? Are they in different countries? Are they in different like jurisdictions, right? Like if you have different countries in the EU, you're still in the EU. So if the EU says like no crypto anymore, and you're fucked. So there's all of these considerations, but there's also just how is the voting power, how is the stake distributed across these validators, right? And so when you look at most of the DPoS networks, one of the problem is that once again, it's not a level, fair playing field, right? Like if you're Coinbase, it's going to be really easy for you to attract a whole lot of stake because you have a lot of users, you have a lot of tokens that are on the network, on the centralized exchange, and you can just market to that users directly in your centralized exchange, delegate to your own validator, and you have this vertically integrated pipeline, right? If you're a community validator, you have none of that. The main way that you can go about attracting stake is like you go, you talk to people, you produce content, you help the ecosystem out, right? And so as a result, we see these networks, right, that have like, okay, like Coinbase is 12%, and then the last guy is like 0.001%, right? So it's like, okay. What we want to do is we want to get to, we want a much smaller set. And this is due to a technical limitation of Comet BFT. Like Comet BFT is great, but the more nodes you add, the more performance you lose, basically. And so, we need to have a smaller set, but we want it to be preventing single points of failure, right? So not enough, like not more than 30% of the voting power in one country or in one cloud, in one data center, in one like jurisdiction, that kind of stuff, right? And the way that we make this happen and that we maximize the decentralization and reliability and security of that set is by having very flat distribution of stake across these operators, right? So basically, here's the model, right? Here's what it will look like on Neutron. People will be able to stake, right? And when they stake, they can choose to delegate to a validator. When they stake, they get a low fixed staking APR, right? About 3%. Now, that on itself might not sound like a lot, but it's actually intended. The reason why that makes sense is because, okay, just 3% is not going to make make you like Warren Buffett. But if you participate in DeFi, you can actually take on like leverage, take on different types of positions that can magnify your rewards, right? And so basically the staking APR becomes a way to incentivize people to participate in DeFi, right? Which helps the ecosystem grow.
So basically you can go with liquid staking, I don't know, like drop, for example, because I don't know exactly, and then go to DeFi, go into Mars, go lend, you put the Neutron out there, and you can borrow some USDC, do some DeFi stuff, buy some Atom, which you can buy the Atom or any other Stride Atom or something.
Yeah, you can take all of these positions. You can also just take on leverage on DNTRN, right? Like not financial advice, obviously, like, do whatever you want to do. I'm not telling you to do this, but one example strategy is you could lend DNTRN, right? Use it as collateral, as you were saying, and then borrow NTRN, right? Because DNTRN is a derivative of NTRN. They're trading kind of like at the same price over time, right? So your chances of liquidations are pretty low. And so you can take that DNTRN, now you can stake it. Now you're earning 3%, but on twice the amount of NTRN, right? And your DNTRN that you just got, right? You can use that as collateral again. And so you can do it again, right? And Mars allows you to do this in one transaction. Basically, you can get a loot like 7 to 10 times depending on the assets. And you go from 3% APR to potentially like 20-30% extra, and you're taking manageable amounts of risk, right? Obviously you should adjust based on like your preferences and situations and stuff, but that can be potentially very appealing to some people, right? So anyway, the staking APR is paid directly to the stakers, not through the validator set, and validators can't take commissions on it because it's meant as an incentive for participating in DeFi, right? Now for the validator set, we also have a different thing, right? So like the DAO itself is going to stake a lot of tokens, right? And what that does is it guarantees the security of the network, right? Normally the idea is that like, if we have most people staking, then we know that the network is going to be secure because people can't acquire enough of the tokens to take over, right?
Is it
The
like
problem is that
67% like in Cosmos? The same.
yeah, 67% is the share of the voting power you need to be able to do anything with the blockchain, right? 34% is what you need to stop it, like make it stop. And 67% is what you need to like try and like actually get malicious transactions included, right? And so that's what we don't want to happen, right? Now, so on most blockchains, what most blockchains do is if the staked portion of the tokens goes like down, they start sending more incentives, right? So that people have an incentive to stake more and stuff. But it creates this kind of like vicious cycle whereby there's so many tokens in the market that first it's hard to have them all staked, and there's like it kills the demand for the asset, right?
It's gonna be
So
the
instead,
Burj Al Arab. People buying, staking, and then it goes to zero.
yeah, exactly, yes, like the classic, right? And so what we do instead, right, is instead of relying on the market for security, we know that the DAO has a lot of tokens, right? The DAO has today about 37% of the supply, 30% of the supply is circulating or such, and the rest is like vesting in different liquidity pools in different positions, and etc. So what that means is that if the DAO stakes enough tokens, it becomes impossible to acquire enough tokens on the market to reach the 67% threshold, right? Because there's too many already staked with honest nodes, and you can't buy enough on the market, basically. So we know that the network is basically theoretically secure. You can't hack it anymore. And so this moves the goalpost between, it's like, okay, are most token holders like selecting validators properly and whatever, to just like, is there, and like, who are the validators in the first place, right? And so there's this idea that if that economic security matters, right? That like if there's not enough stake delegated and whatever, then that's a problem because like people could buy enough tokens and like hack it. But in practice, that doesn't happen. What really matters, actually, the thing that tells you if a blockchain is secure or healthy or not, is who the operators are. If the validators are like trustworthy, they're honest, then you don't have a problem, right? And the assumption is basically most validators would lose way more by hacking a network than they would gain from it, right? And the reason for that is, first, there's legal liability. That's not something we want to rely on, but it's a fact, right? And there's also reputation, right? Validators are not just validators on one network, they're validators across a bunch of different networks, right? And so if they hack one network, what are the other networks going to do? They're not going to be super happy about working with them, And so like the business you lose overall is just like way more than what you would be making from an exploit, right? And these are kind of like the reasons why we don't see economic attack in practice, right? There's two examples to drive the point home there. Like, Gravity Bridge, for a very, very long time, like we're talking like years, basically, it ran with about $10 million of economic security, but $60 million of TVL. Never got hacked, never got exploited, right? But there's a clear incentive, right? Like you pay $10 million, roughly speaking, a bit more complicated, but roughly speaking, you get 60 million. Cool. I mean, that sounds like a good trade. Nobody did it. Likewise, Terra, when Terra was collapsing, there were still $2 billion of ETH on the network, right? 2 billion. Nobody hacked it, despite the fact that like the economic security was super, super low. Same thing. It's just like, it just doesn't happen, basically. As long as the operators are honest, which you can assume if they also have like reputations and like legal, like, and money at stake across the ecosystems and such, like it just, it's sufficient to guarantee the security of the network, basically. So, we take these learnings, and basically what we do is like, okay, so number one, the DAO itself will delegate enough tokens that it's not possible to take over the network because there aren't enough tokens in circulation to acquire that 67% threshold, right? Secondly, what you do is you stop you solve another problem, which is that if you're a validator on a proof of stake network today, when it's the bull market, you're making shit tons of money, right? Like the big validators can be making like... And that's it. And when it's the bear, you're going bankrupt. You're making zero money. You can't even, like, it's horrible, right? But actually what you're doing, technically speaking, you're operating a business that is providing infrastructure. The way that it should work is like, hey, here is my cost. Here's my margin. I'm making a small profit over time. And then that's the price that I quote for my services, right? And so this is
Yeah,
kind of like
you
what we're
can
trying
make
to
a
do.
forecast. You can do a forecast in this business we are in. So the fact
Well, on
that you
Neutron, you
guys
can
are
actually.
trying to solve this, yeah,
Yeah.
the fact that you guys want to solve this, that's a big two thumbs up for me.
Yeah, it's like, like if you want a healthy network, you need the validators to be sustainable long term, right? And so like you should like think about like about that, right? And so like the idea is that like, okay, we're going to make a model, and we can afford to do this because we have a much smaller set as well, right? If you're trying to do this for like 2,000, like 200 validators, like the cost per year is just insane, right? But for 20, you can basically be like, okay, on average, it costs like, 2,000, 3,000, you can look at the data and then be like, okay, so the price of infrastructure and labor and all of these things that go into it, and then you add a small margin on top of it, and you pay that to the validators every month, assuming that they meet performance threshold, right? You do your work, we can see this from the performance data that the chain itself knows. If you do, you get a consistent payout that is in dollar value, not in token value, because at the end of the day, as a business, you're covering your bills in dollar values, right? And so, yeah.
Oh, so
So
it's
those
still
are
made
some of
in
like
Neutron. It's still made in Neutron, but paired with USD.
So it's basically, so Neutron as an oracle, so a mechanism by which the blockchain itself knows about the prices of tokens for all across the industry, right? So like we take data from Binance, we take data from Radium and other dexes and stuff. We ingest all of this into the blockchain at every block. So at every block, the blockchain knows what the price of the asset is, right? So for example, if the DAO says, okay, we're going to pay the validators $3,000 every month if they perform really well, the network can then calculate, okay, to pay $3,000, I need to send X amount of tokens this month. And so if the price goes up, we send less tokens. If the price goes down, we send more tokens.
Yeah, it's automatically from smart contract.
Yeah, that's right. So actually, it's an SDK module in this case, but yes, you're exactly right. Okay. We can do this automatically. Yeah. So those are some of the changes on like just the validation and such. The TLDR is that like from like another thing as well is that like on most DPoS networks, when you receive a state delegation, you also receive governance voting power, right? But this also creates like a very weird situation where you have companies that are experts in infrastructure are also asked to be like politicians, right? And maybe they want to do it, maybe they're great at it, right? Like that's possible, but not everyone is great at it or wants to do it, right? And so like these roles should not be coupled with one another. So on Neutron, when you stake with somebody, that gives them like participation right in the block production process, but not in the governance process. Those things are separate. And if you're a validator and you're interested in doing governance, whether or not you're in the set, actually, like regardless of who you are, you can become a delegate via the upcoming kind of like voting power delegations from the DAO, and then basically at that point you're able to like be a politician basically and like have influence and stuff, right? To push the network in the right direction.
has this take like this because basically you can choose if you want your validator to vote on behalf of you, or if you want to delegate the vote to somebody else.
That's cool. Yeah, that's really cool.
Yeah, and I like that they are going in this direction because, as you said, when you manage, 30, 40 networks and you have this responsibility, and it's just hard to keep track sometimes. And you have to take decisions.
Yeah, and it's also like
maybe are important.
Exactly, right? And it's like from the validator's perspective, it's huge amounts of work, which can be really difficult to do because you don't necessarily have all of the information to make a good decision. And it's like, you have your reputation that's staked on the decisions and the votes that you make and stuff. So it's not ideal as a validator, right? You can't concentrate on the thing that you know how to do at scale. But also from the network's perspective, from the DAO's perspective, what you want to maximize in how you design the governance system is you want to maximize the quality of the decision that the DAO is making, right? And so you should design it to do that, not just design it for convenience of like, oh, okay, you guys do everything, So anyway, TLDR, right? Like the idea of like this model is a couple of things. Like one, we're able to guarantee security by having the DAO itself be opinionated about delegations, right? Now, this is a process that will get refined over time. Like the initial set that was put together is mostly meant to provide a very smooth migration. And so for that purpose, it was important to have validators that have been running for a long time, that have a lot of stake, ideally on the Cosmos Hub, but that also have been like generally supportive and such. And so, this initial, like there was an initial set for the migration, and there will be kind of like an ongoing process by which if validators like fail to perform their duty, they will be rotated, new validators will be brought on. And so we're working on like finalizing a proposal for how exactly this should work, which will be published like to the DAO and such. And so that is coming pretty soon. But TLDR, one, it ensures a high degree of security. Two, it allows the network to become way more performant and actually decentralized in practice, right? Like at least not have any single points of failure. And three, from an economics perspective, it's meant so that the validators are free to operate as service providers that make a consistent profit doing their working in their role. And two, it's meant to create a strong incentive for people to like participate in DeFi with the Ethereum token and like throughout the platform as well, if that makes sense.
That makes sense, and thank you for the explanation. I mean, it really makes a lot more sense in my head also.
Yeah, like we try to think about the things that we do,
Yeah.
So and I mean, like, we're only human, like all of the contributors at Neutron and stuff, so like we make mistakes as well, right? But like on these things, on protocol design, there's a lot of efforts and thought that go into this, and like checking our assumptions and like and such to like produce good mechanisms, basically.
We've mentioned earlier the apps like Drop, which is live on mainnet. They're gonna have their token soon. Mars also is live on mainnet on Neutron. But what kind of other apps can we expect when the migration comes? Can you share something more about the eco?
Yeah. So, well, first there's something like, are you familiar with Bull Bear?
Wait.
Bull Bear?
No.
Oh, check it out. So bull like a bull, and bear like so bullbear.zone. So the version 1 of the product, which is live right now, is a perpetuals long short trading app, right? Basically, it allows you to trade on narratives without the risk of getting naked perps. Well, you can still get liquidated, but you really have to take a really bad bet to get liquidated. Because the idea is basically, most people, the way they trade perps is they'll go long one thing and one thing only, right? But you might be right that this project is going to do really well. But what you don't know is what is the market going to do, right? Like maybe the project is going to do amazing, but Bitcoin is going to take a massive dump. Trump is going to make a bad tweet, and like everything goes minus like 40%.
You can control that.
Yeah, exactly, right? Like you don't know, and so like taking that long position is very risky because you're exposed to all of the risk in the market, right? You don't know what's going to happen in the market, right? But so what you can do is you can take these long short positions. It's like you're taking one long and one short, and what that does is that you're isolating a lot of the market noise from your trade, right? You're now not betting on just like, this is going to go up in price and absolute value. You're saying, relatively speaking, this project is going to perform better than this other project and than the market in general, right? And so the result of this is that like, your short is way less risky. You can take a bunch of them and play around with like different assets and stuff, but your short, your perpetuals positions are way less risky because they're hedging out a lot of the risk in the market, and that is just a smarter way to trade for most people, actually. Fun fact: do you know hedge funds?
Yes.
Do you know where they get their names from? Why we call them hedge funds?
I know what a hedge is, but I don't know why is it called a hedge, to be honest.
Also, so fun fact, they're called hedge funds because the first kind of like trading strategies that the first hedge funds were kind of like doing was exactly that, like long and short, right? They were hedging out the exposure to the market by using that short while taking their directional positions. So it was a safer, smarter way for them to trade. So that's why they're called hedge funds, right?
Yeah, but it's still very hard to execute. That's the issue.
Well, not on bull bear. That's the point. It's like bull bear makes it like 3 clicks, right? It's like you pick one token.
No, I'm telling not from a technical point of view, but from a strategy point of view.
I don't
I
know.
mean, when do you
like
close
what I
your when
actually
do you close
noticed
your position?
when it's green. Yeah, I mean, like, sure, right? Like, but that's trading, right? But at least,
Yeah,
like,
exactly.
you don't go to zero in like 5 seconds when you're not looking at your computer, right?
With
And actually, like,
100x.
yeah, but well, you can go up in leverage because the position is better constructed. Generally speaking, you have better odds of achieving good outcomes, right? Like, obviously, you're not guaranteed to make money. You can lose money. Obviously, you're making, a financial prediction, so you could be wrong. But you're doing it in a way that like minimizes your risk, basically. So that's kind of like the point. But um, it elapsed me. But one thing that I noticed that I find really interesting is that if you look at the leaderboards and like the user P&L of most perpetuals exchange, the majority of users are losing money, right? The majority of people are getting wrecked. On bull bear, it's the contrary. On bull bear, the majority of users are making small profits. They're not necessarily making like huge amounts of money, right? They're not robbing the
Yeah,
bank,
I
but
need to check that out.
I know, right? So, I don't know, the stats may evolve or something, but the last time I checked, there were like 150 users and, more than 75 of them were like in profits, which normally is the contrary, right? So like, and it was actually more than the majority. So anyway, just anecdotal evidence. I'm not saying there's like a law of the universe or something. It may change in the future, but like that was good to see because it seems that the product is doing what it's meant to, which is like to allow people to easily trade in ways that are smarter. So yeah, that's one interesting protocol that I think is really fun. It's simple and it's fun, but they're launching a new feature that is pretty unique. As far as I know, it doesn't exist anywhere else in the industry. And it's called Perpetuals clusters. And so the idea is that using Neutron's Oracle and like Marsh protocols infrastructure and everything like these things, you can basically instead of I trade one perp versus another perp, now you can combine them and make a cluster, kind of like an index of perps, right? So for example, you can be like, I think, okay, what are you bearish on? Give me a category of projects that you're bearish on.
Gaming.
Okay, yeah, exactly. And what are you bullish on?
DeFi and at some point, and meme coins. DeFi,
Okay.
meme coins. Yeah, let's go like that. Infrastructure.
Okay. So now what you can do with clusters, right, is like, let's say I'm going to take 5 tokens in the gaming side, right? And I'm gonna create a cluster or group, right? So one perpetuals that represents them all, right? Now I can short that, and I'll be short the average of their performance, right? Which is good because now once again, like maybe I don't know, but one of them has a great announcement coming and they're gonna pump hard. But overall, the category, my bet is right, and the category is going down. And so like that's a smarter way for me to trade on that narrative, right? That like gaming is not gonna do well. But you can also do like, I'll put like 5 short gaming and 5 long meme coins because I think meme coins are going to do really well, right? And now you can like long the cluster's performance, right? Or short the cluster's performance and stuff. So basically, you can combine a lot of perps together to create these like stories, these narratives, and trade that directly, right? And in doing so, you're reducing the risks that you have by only taking a bet on one single project that might have something that you don't know about, and you're betting on just more fundamental trends in the industry, which are more stable things that like going, over time. Basically,
like it was with AI and RW. You say, oh, okay, AI and RW makes sense long term. I could go
yeah,
along here,
like you
and
hear
even meme
everybody's
coins,
talking about
meme
it on
coins
Twitter.
go like this. Yeah, meme coins go like this. I can short meme coins.
Yeah. And so like, you could, when everybody's starting to talk about like RWAs, okay, that's my signal. I think RWAs are great. I'm going to long RWAs. But meme coins, everybody was talking about it like 3 weeks ago. I don't hear about it anymore, so I'm going to short that, right? And now you've created a bet on like the industry as a whole and where it's going, right? And you've hedged out a bunch of the market's exposure as well. So these kinds of like interesting experiences. And so you can create your own clusters, or you can use pre-made clusters. They all have a name and different like asset selections and stuff. So anyway, it's going to be like a unique, interesting experiment in my opinion. That's one app, right? But now, okay, what are the fundamental building blocks that I think are really exciting that are coming soon? One thing that I'm very, very excited about is, so you know how fragmentation is a problem for liquidity?
Yeah, L2s and stuff.
Yeah, exactly, right. So like you have different chains, and you have different, on each chain you have like 10 dexes, and they all share like a little bit of it. So on Neutron, we're trying to fix that problem. And the way that we do this is we have the ecosystem, right? But in the blockchain itself, we have an order book, right? And order books are like the kind of like more efficient ways of trading and managing liquidity. So we have this order book. And so what we do is we work with the teams in the ecosystem so that they can integrate with that order book. And what that does is that all of the liquidity gets onto the order book, and all of the trading volume goes into the order book. And what that means is that now, instead of having these fragmented pools of liquidity that you need to arb and stuff that are kind of like not efficient, traders get the best prices from the aggregated liquidity, and liquidity managers get to compete on fair terms, which is like, I will provide liquidity more efficiently or attract more liquidity than you, thanks to whatever my strategy is. And as a result of this, I will earn more fees from the trading flow and stuff. It also creates something that's really interesting, which is it benefits all of the strategies because the strategies can trade against one another, right? For example, PCL is the main strategy that Astroport uses. And it's a very conservative strategy, which adjust fees in order to accrue as much fees as possible to compensate impermanent loss. It's a way of protecting people who provide liquidity, right? And so PCL is great as an LP, but it has one major downside, which is that because the fees can be so high, it's very hard. Like you get a lot of slippage when you're trading, right? And so as a result of this, most people trade elsewhere, right? And so like that's kind of like you adjusted the fee to protect the LP, but you don't get the volume anymore. So like it's not ideal. And so on the other side, the duality team at Neutron is working on something we call Supervaults. And Supervaults are really interesting for a number of reasons. We'll touch on a couple of them, not all of them like today, but to finish on that point, we'll talk about how they work afterwards. But what's interesting about them is
getting to that point. I really wanted to know more about the Supervaults and how exactly
they're kind of crazy,
the whole
actually.
liquidity provisioning.
Yeah.
Please.
And so what the nice thing about having everybody on that order book, right, is that the Supervaults, we'll talk about how they work afterwards, but generally speaking, what they do is they're able to provide liquidity at the latest prices. So at the prices of like Binance and such, right, like the actual price of this asset in the industry at that time. And they're able, as a result of that capability, they're able to be very aggressive on the spreads. So the difference between the fair price of the asset and the price that you're paying when you're buying or selling, right? And so that is kind of like the contrary of PCL, right? Like PCL has very large spread, Supervaults have very tight spreads, and they have great pricing. Now, because they're both on the order book, what happens is that, let's say Astroport's liquidity thinks that the mid price is here, but actually, in between blocks and stuff, like there hasn't been a lot of trade, so it stayed there. But in between blocks, the price of the asset actually moved, right? Maybe it's here now. The Supervaults are going to come in, they're going to provide their liquidity here. But because there's liquidity that's too cheap or too expensive here, before they actually provide liquidity, they're going to actually trade through it, which brings the Astroport price back in the real price, right? So Astroport is now quoting better prices. Also, it generated a bunch of volume for Astroport, which means that the PCL LPs are now actually making money. And for the Supervaults, this is great because they just captured an arbitrage opportunity, right? Normally, you would have like market makers or something doing that on the dexes and taking the money generally out of the ecosystem. But here, because it's a Supervault doing it, the money gets re-injected as liquidity into the order book because people are already providing their capital to that pool, right? And so you end up with way more volume for everybody, way better prices, way more APR for both of the strategies as well, and more sustainable APRs. And so it's kind of like, win-win for everybody to aggregate order flow and liquidity and such together, right? So that's kind of the one of the unlocks and what I think is a cool thing about Neutron, if that makes sense.
And are the Supervaults are gonna be live after the upgrade?
Yeah, so they're actually live right now on
Okay.
mainnet, not publicly. Like basically, we've been investing resources and like testing them very deeply. Like we want to have very deep understanding of the microeconomics of like exactly how they behave under certain market conditions. And the reason is like, you know, while it's our own capital in the vault, if we lose some, it's okay, right? Because we're investing in like developing this thing. But once we release it to the public, we want to have full certainty, like not just with the audit, right? From an economic perspective, we want to make sure that the strategy is really, really great and that it's as profitable as possible. And so we're doing a lot of that testing right now, and they're live right now. We're testing with real money, basically, on chain. And so what's funny is that like one of the Supervaults, it has like $600 of liquidity. And it did $3 million of volume in like the last 30 days or something, like with $600.
And what kind of assets can we see in the Supervaults? Can you put any kind of assets or only Cosmos
There's one
assets?
restriction. You need an oracle price. So actually, that's a great segue into like how they work. But you need to be able to know the price of the asset. That oracle price, if the asset is from Neutron and is most liquid on Neutron and price discovery happens on Neutron, that oracle price may be the order book itself, but generally speaking, you need you need an oracle, and so you know, you want the asset ideally to be listed on Binance, to be listed on like other centralized exchanges,
that's the bare minimum.
on Radium and stuff. Yeah, exactly. Yeah, to make sure that the feed is reliable, right?
But we can do multi-chain, right? I mean, I can put like a basket with Neutron and let's say some shitcoin from Solana. And something from Ethereum.
If the shitcoin has the price feed, yes, you can do it.
Yeah, of course.
Yeah. And so, and you know, like I think where they're most exciting is like for really large assets, like, you know, for Bitcoin, for ETH, for where there's a lot of like, you know, for Solana, for TIA, for Atom, for NTRN, and all of these things, right? Because they allow you to get like basically the best prices in the industry, but on chain with no KYC, you know, self-custody, your coins, your keys, all of these things, right? And so yeah, that's what's pretty exciting. They do the arbitrage, they have more volume and stuff like that. That's fine. You can also make them work for derivatives. So like assets that are supposed to be correlated, you can have the vaults have a custom market making strategy effectively that properly prices them. Such that you can minimize like depegs and stuff. You can maximize like how smooth the prices are basically, which helps make these, you know, get these better integrated into DeFi, which helps like prevent liquidations from people who use them as collateral. That kind of stuff. Now, how do they work? Maybe does that make sense? Like does that make sense to talk about? Cool. Okay.
Yeah.
So
let's do it.
So for context, for reference, right? When you're providing liquidity to an AMM, let's say you're providing to an XYK curve. I'm using this as an example because it's part of that category, that system, but it's also like the simplest method to understand, right? So when you're providing to an XYK curve protocol, basically you're putting two tokens into a pool, and the pool itself is using the ratio between the assets to calculate the price of the asset, right? So if I have one USDC in the pool, yeah, exactly right. And so the price only changes when somebody trades against the pool, right? Now that is actually a problem because of a few things. First, that pool is not the only pool where you can trade these assets. There are other markets, and in fact, there are more efficient markets out there, right? Like for example, centralized exchanges are way more efficient than XYK pools, right? And so the reality is that like your XYK pool may not get any trades because it's not offering a great price, but there's a lot of trades happening and the price is changing, right? And especially like, you know, if you're on the slow network or something, these differences can be huge, right? Now you have a situation whereby the price that I'm offering as a pool when I'm depositing capital into this is actually old. It's wrong. Like the price from the market has moved on, right? And so you have entities that are sophisticated, like arbitrageurs. What they do is like they literally just look at all the pools they wait for the pools to give you a bad price, like a price that basically is too generous, right? It's outdated, and so I know that like, oh, I can buy it for $10 here and then sell it on Binance for $11 because the price has moved, right? So I'm just going to do that, right? And by doing this, what I'm doing is that some people say that I'm providing a service by helping the pools be like keep pricing up, which can be true. That's one way of saying this. But in reality, it's actually the LPs are losing money at every fucking trade, right? Like, and they're guaranteed to lose. When that arbitrager takes that trade, they know that they're going to win, right? And so that's a problem. If you're trying to make things that are like sustainable on chain, like that's a problem. So Supervaults have two differences basically. First, they're active, so they're constantly updating their pricing, and two, they have the ability. Three things, I guess. So one, they're active. They're constantly updating their pricing rather than being just passive and waiting for shit to happen. Two, they have access to information about the broader industry, not just what is happening in their contract, and they do so through the Neutron Oracle. And three, they have a few superpowers in how the transactions in the blockchain are ordered. Right, and that allows them to minimize operational cost of just market making, and two, to be protected against front running. Right, like you can't adversely select them. The traders that were just like waiting for a good trade, they can't do that with Supervaults because the Supervaults don't take a bad trade. They always take a good trade. That's the point. Fair trades, but good trades. And so basically, what happens, right, is like, okay, new block. The Supervaults look at two things. They look at how many tokens do I have in my balance, and they look at what are the prices of these tokens, what are the fair prices, right? They take a little bit of the liquidity and they put it really close to that price, right? The point is that now, as a trader, that liquidity means that you can trade very decent amounts with almost zero slippage, right? So for you as a trader, that's great. And for the pool, they're making a very tiny.
And for new users also, because a lot of new users are getting rugged on slippage.
Yeah.
You know how it was on Ethereum back in the day.
Oh yeah. Oh, I just paid 50% in slippage. Wow. So not great. So yeah, exactly. Like that very aggressive liquidity allows traders to get really good price execution. Basically, it's like it makes a lot of sense to trade here because you're getting the best prices available. That's number one. Then it takes the rest of the liquidity and it distributes it like further and further away from the mid price, but always within the plus or minus 5% range. And the reason for that is because that is, roughly speaking, the liquidation bounties of lending and borrowing marketplaces, right? And so what that does is, by having all of the liquidity here, we can ensure that the liquidations of lending and borrowing marketplaces are profitable, basically. And by doing this, we maximize the value of that liquidity to the ecosystem, right? So we started our block, we looked at the balances and the prices, we started providing our liquidity. Now, all of this happened before anybody can make any transaction, right? That's at the very beginning of the block itself. That's in the system part of the block. And it's free for the Supervaults. They don't pay gas to do this. It's just part of the mechanism of the chain. And that's a feature of Neutron. Like that's a piece of infrastructure that Neutron offers called the cron modules, which allows you to have automation and gasless execution at the top or at the bottom of the block. So at the very beginning or at the very end, you choose. Very powerful piece of infrastructure. So they do this, they provide liquidity. Now we start the public part of the block, right? Like you and me, we can start sending transactions and stuff, right? So I see that the prices for Bitcoin are great and they actually went up a little bit. No, let's say they went down a little bit. I want to buy some more. So I'm going to make a trade. My trade gets in that segment of the block, right? For me as a trader, what's great is that like I have the guarantee that I'm getting the freshest prices, right? So we execute all of the orders, then we close the block and we withdraw all of the liquidity. And then we start the cycle again. Generally, like I'm simplifying heavily because like there's a bunch of like detail on like how you rebalance when there's a big trade going in one direction and other things. But generally speaking, this is how it works.
Yeah, I could only assume because in the back end is always more complicated that it actually is in the front end,
Yeah, it's like if I had to draw it to you, like there's kind of like four pieces that matter, right? It's like you kind of have like the system part of the blockchain, and then you have the virtual machine, which is kind of like where the ecosystem happens, right? Like where you have the Mars smart contracts and Algebra and stuff. In the system part, you have the duality order book, right? In the ecosystem part, you have the Supervaults. The Supervaults connect with the order book and they manage liquidity there. And to do so, they leverage two other pieces of infrastructure, which are one, the cron module, so this like gasless native automation feature that is unique to Neutron, and two, the enshrined oracle. So the fact that every validator on the network asks Binance and other venues like Radium and Uniswap and other things for the latest prices. They calculate the means and they update that to the chain at every block, right? That's the enshrined oracle. So those are kind of like the three pieces of infrastructure, and the smart contracts are kind of like what's involved in this, if that makes sense.
Sounds good. But let's zoom out a little from
Sure.
From DeFi, from trading, from protocols, from all this stuff, and let's talk a little bit about who is Avril, because building in crypto is like sprinting a marathon. You know that very well. How do you personally manage intensity, pressure, traveling, and uncertainty in markets?
Yeah, I mean, yes, it can be rough. Like, but I think two things. Like, I think the first thing, like, I don't think I have room to complain. The working in a high position working in any position in this industry tends to generally be paid better than most normal jobs. And I'm lucky to do something that I love, right? So generally speaking, like I love what I do, and I'm generally well cared for. I'm definitely not the person who makes the most money in the industry, but I make a lot more money than when I was a journalist, for example, right? So I don't have anything to complain. That being said, I think transparently, I work at least 12 hours a day, and that's just like the way that it works. My advice would be, don't do the things that I do, because I'm just notoriously bad at taking care of like the work-life balance thing. I'm a very passion-driven person, and so like when I was a journalist, today when I work on crypto, I do it because like there's something like I love learning about new stuff, especially if they're kind of complicated, and so I get nerd sniped about the thing that I worked on like constantly, basically, and so I end up obsessing over stuff, and just like boom, an entire day has gone, and like, okay, I guess I'll take a couple of hours of sleep and go back to it. So
yeah, we're the same here, all
like,
in.
Yeah, pretty much all in. Yes, that's right. Yeah, you were telling me about it earlier. I guess you kind of have to be a bit passionate about the industry if you want to last long in it. Like you can definitely start working in it and like do a bit without too much passion. Like maybe that's a good career move, I don't know. But if you want to survive in it like long term, especially with like the up and lows of like the sentiment and the market and like everything, it's like, yeah, I guess you kind of need to have a good reason to be here. So.
And what does your average day actually look like?
Oh, you don't want to know. So okay, I currently live in Asia, which means that I'm on ICT +8 currently, and a good chunk of our team and the people that I work with are either in Europe or in the US, which means that my day starts at around midday. I start working, and like basically I do focused work. At this point, I don't have too many calls yet, so I just like work on everything that I need to get done. So I wake up around that time actually, and then around 7 to 9 p.m. the calls start. I do calls generally until like 2 a.m. And then I'll do another probably 4 or 5 hours of like focused work after that. So I go to bed around like 6, 7 a.m. or something most of the days.
That's kind of rough, though.
Yeah, it is.
It's really rough. I mean,
it's fine. It's like it's like you got to do what you got to do, and like when I'm back in Europe, for example, like my schedule is a lot easier. But like right now I'm in Asia, so it's kind of like, it's like we're past midnight here, for example, right? It's like, it's fine. You just end up like having a slightly skew schedule. I guess I'm doing the night shift. That's what it is.
Exactly. The line manager.
Yeah, that's right.
um, in the last, let's say, 3 months, the whole state of Cosmos has changed radically. And I wanted to pick your brain and see exactly what do you think about the state of the Cosmos today, what are its strengths, growing pace, what are the opportunities right now?
Yeah, that's a really good question. I'm excited. I love I love Cosmos. I love the like the tech has really unique properties. I love the vision of like, sovereign applications and app chains that are able to like leverage an open protocol for communicating with one another. I love a lot of the people that I've worked with for like a long time now. So and it's been in a very rough spot for a long time. And part of this was, in my opinion, because there was no coherent vision and a coherent execution on a vision. And so like I think that has been like a plague for the ecosystem for like a long time. And so it's very exciting to me to see a very capable team with a strong vision where everybody is aligned, like both in that team, but as well in like the ecosystem on like delivering on that vision and like trying it out, like making that work rather than doing 15 different things at the same time and failing everything, right? So I think this is going into the right direction. I think it is a huge challenge to successfully turn around an entire ecosystem. It's a huge task. But I think if anyone can do it, like it's probably the people that are like it's probably the folks at ICL, like Barry, Mag, like the entire team is really amazing. Like they're elite builders. So that makes me really excited. Like honestly, I hope that like in the coming months and like years, we're gonna see kind of like a full-on revival of Cosmos and like IBC becoming like a standard and stuff. I think that's what they're working on basically, and like if they succeed, I think it's gonna change the industry, which I think is really great. So I'm excited about that. I'm really excited about that.
Yes, I'm really looking forward as well. Where do you see Neutron in the next, let's say, 3 to 5 years, and what would you define as mission accomplished? And both to you personally, because you invested so much in this project. Is
That's a good question. Honestly, like not on the. I personally never defined what's my exit. Like I don't have an answer for you. I don't know when I'll be considered, like when I'll consider myself done. But for Neutron, what I would consider like a really good state, and like obviously there's a lot of, it's going to be a long road to get there, right? But I think the way I see it, in a few years, if we're successful, there are millions of people all around the world that feel very comfortable holding a good chunk of their wealth on Neutron because it's providing them with just better access to financial services that actually matter in their daily lives. So it's like, speculation and all of this is important. Like people, people buy stocks and stuff. And like, that's a great way to try and like build wealth faster. But what a lot of our focus goes into is like creating these more like long-term wealth building things, like sustainable, organic yield products that anyone on the internet can enter, right? It's not as sexy maybe. And like, it's not like 10 million% APR and whatever.
APR.
Right? Yeah, it's not that, but it's like if you know about compounding effects, right? If you're earning like 10% year on year, you're like, even if you start with very little, you're going to end up doing very, very well, right? Like an example, I was chatting with some of the folks on another podcast a couple of like a week or something ago, and we were talking about like some of the richest men on the planet and stuff. And like one example that I find really interesting is like, so Warren Buffett is one of the wealthiest men on the planet, right? And he's built most of that wealth like investing, and he started really, really young, right? I think his investment career is like 66 years or something. I'm really not precise on the it's insane.
Yeah, but he was a teenager when he started, right?
Yeah, he was young. Yeah, he started investing really, really early. and he's one of the richest men, like, right? His return rate on average, if I remember correctly, and I'm not sure about the exact numbers, but the orders of magnitudes are correct. His returns are about 20% per year, right? Consistently over 60 years, right? And that's how he made billions. Now, compare this with the folks who founded the Medallion Fund, right? Medallion Fund is like a hedge fund that uses really super advanced math to do crazy trades. And they're widely considered as one of or the most successful hedge fund in history, right? Their year-on-year returns were 60%, right? Guess who's richer? Warren Buffett or the guy who founded the Medallion Fund? Warren Buffett is doing 20%. It's Warren Buffett.
Yeah, because of the auto compounding.
That's right, because of compounding, right? Right. So like you're earning 10% on $10 the first time, and then like it's $11 and you're earning 10% on that. So you're earning more and more every year. If the guy who started the Medallion Fund started at the same age as with the same performance, but at the same age as Warren Buffett, today he wouldn't have billions of dollars. He would have trillions. He would have got trillions of dollars, which is just insane, right? And so like this compounding gain thing is really important to understand. And so like to a large extent, like for most people, I don't think that trading meme coins makes sense, right? Like if you're a good trader, that's great. Like if you can make money trading meme coins, go for it by all means, right? But for most people, like probably not going to happen, right? You're probably just going to lose money over time, right? And so I think for most people, the reality is you just need like these kind of like stable, better than what you get in traditional finance, secure products that just like help you build wealth over time so that you can actually save and beat inflation and actually like build wealth for yourself over time. And yeah, that's kind of like a big part of what we want to bring to the industry. And so like, in 5 years, to go back to your question, I think Neutron if we're successful, Neutron is a place where, millions of users across the planet trust the network with a large portion of their wealth, and they're using it to participate in the actual economy of the network and earn stable, predictable rewards with minimized risks in order to build wealth over time. And if they want to degen, they can also do this. Like we'll have by that point like the most efficient like spot trading and perps trading. Like we'll have like cool like experiences like bull bear. We'll have like very degen like, oh, let's leverage that up and like short this and whatever like yield strategies if you're interested in more degen stuff. But I think this idea of like, hey, let's build like financial products that make sense at scale and can be distributed to everybody. I think is like one of the most interesting part of the space. Because it's actually doing what crypto was meant to, which is like democratize access to finance and the benefits of like properly made finance, and remove the middleman, right? Like we replace them with code, and then boom. So yeah, I guess that's kind of like that.
We are entering the last chapter of the podcast, and we want to wrap things up with some rapid fire questions to get a sense of where your head at when it comes to crypto, but for this, like just quick top of mind answers.
Sure, hit me up.
What's the most underrated and overrated idea in crypto right now?
Underrated and overrated idea in crypto right now. I think pure performance is fairly overrated. Like basically people have the wrong understanding of like what performance and why it matters basically, and so like just the number is smaller is like overrated basically. Underrated, I think people underrate actually that's hard. What do they underrate? I think basically there's a bunch of inefficiencies in the space, which you can see them as a problem or you can see them as an opportunity. And some of the products that we work on that we're working on right now are like basically taking advantage of these opportunities to basically help these ecosystems be more efficient, but also distribute the yield to like long-term oriented users so that they can have these kinds of things that help them build wealth over time. So I think that's really interesting. And it's like, I think we're starting to see a bunch of teams like look into it. We've been working on it for like 4 to 6 months already, but like we're starting to see more and more teams be like, oh wait, there's something here. So but I think we'll have its time in the spotlight. We call it like LTTs, like liquid trade tokens. They're kind of like, okay, I'll take the inefficiencies, make them opportunity for my ecosystem, and tokenize them so that people can have access to it. Like, anyway.
What are your top 3 crypto apps you personally use?
I think Hyperliquid is a masterclass and like, a great trading experience on. Well, it's not the most decentralized, but like it's a great trading app. Bull Bear is probably the funniest like trading experience that I know of, and like I really love Mars Protocol. It's a bit more complicated to get started with because there's so much functionality, like there's so much control you have as a user. And so it takes a little bit of like learning, but once you understand how you can use this protocol, it's just insane what you can do. Like you can combine like lending and borrowing with trading with like perps positions, which allows you to like create like really just insane yield strategies that you can leverage up safely. And so it's just so powerful.
One piece of advice you'd give to new builders entering the space?
Read books, read more books.
And this one is very interesting because you had an interesting career in journalism. So what's one non-crypto book, film, or person that deeply influenced you, how you lead and think?
Oh, a non-crypto book, non-business or just non-crypto?
Could be business, but non-crypto. Could be crypto. Let's go.
I guess there's, uh, I guess my 2 favorite books are one, The Alchemist by Paulo Coelho, is like a really great book about life. And the other one is, and this one is actually like it's trickier, so that's why I'm saying two. It's trickier because it's in French. But there's this really great author called Alain Damasio, who has been writing a bunch of like philosophical fantasy kind of. And he wrote a book called The Herd Against the Wind or something like this, like The Tribe Against the Wind or something. There's a story of like people who are looking for the origin of the wind in their world. And it is extremely beautiful and profound. And it's like, it changed the way that I relate to other people and see my role in like society kind of. So like those are the 2 favorite books, I guess.
And before you wrap this up, where can you follow Neutron for more updates?
Yeah, on Twitter is definitely a good place to start. So that would be like at Neutron _org, so org. Great place to start. You can also join our community channels, so like TME, Neutron community or something. You'll find this on our Twitter anyway. If you, honestly, just start with the Twitter and you'll find everything else from there, basically. So,
thanks. Thank you for this, Avril. It was really great. Have a great one.
Yeah, thank you very much. Thanks for having me. It was great chatting, actually. And sorry, I think we went overboard by like more than 20 minutes or something.
I love to get overboard and going off script and talking deep dives and stuff like that. It can be,
That makes sense. I'm excited to see the broadcast. I'll share it with a couple of my people. I hope they'll like it. Thanks a lot for the great questions.
Yes. Have a great one.
Take care.